S&P 500 Complete is your go-to for regular updates on all 500 stocks. Subscribe so you never miss out. Let's jump in. This could be huge for Caterpillar. Despite trading at what looks like a premium, it might actually be massively undervalued. We are talking about a company sitting at the center of three massive growth trends, and the numbers might shock you. Let me break this down. First, the AI data center boom is creating explosive demand for their power solutions. Melius Research is calling for 30% upside just from the engine segment alone, as hyperscale data centers need Caterpillar's massive reciprocating engines and gas turbines to power AI infrastructure. This is a completely new revenue stream that was not even on the radar 2 years ago. Second, Caterpillar is sitting on a record backlog of $37.5 billion. That's up $2.5 billion just this quarter. This shows incredible underlying demand, despite what you might be hearing about construction slowdowns. Global infrastructure spending is growing at 5.1% annually, and they are perfectly positioned to capture this. Third, the valuation story is compelling. Caterpillar trades at 22 times forward earnings versus its 10-year average of 40 times. Even compared to peers at 28 times, CAT looks cheap. Multiple analysts, including Melius Baird and Citi, have buy ratings with price targets up to $500. That's 15% upside from current levels. Fourth, the cash generation machine is incredible. $4.4 billion in free cash flow in just the first half of 2025. With management returning $1.5 billion through dividends and buybacks this quarter alone, they have raised dividends for 31 consecutive years. That's the kind of consistency you want in volatile markets. And fifth, Caterpillar's digital transformation with autonomous mining solutions and cloud partnerships with AWS and Microsoft is creating higher margin recurring revenue streams. This is not just heavy machinery anymore. It's becoming a technology-enabled industrial powerhouse with pricing discipline that supports margin recovery. Now, full transparency, there is one major concern that bears are absolutely right about. Tariffs are crushing margins right now. Caterpillar took a $500 million hit just in Q2 from U.S. tariffs, and this could reach $1.5 billion for the full year. Margins dropped from 21% to 17% compared to last year. Until we get tariff relief, these cost pressures are real and they are painful. So that's the breakdown: massive long-term catalysts versus near-term tariff headwinds. What do you think? Are you bullish or bearish on Caterpillar? Want the complete bull and bear research reports with all the detailed data and price targets? Let us know in the comments.